Yes, people, welcome to the new YouTube channel. So I'm going to be breaking down exactly how I made $3,698 selling AUD USD. Getting straight into it. So what do I do when I first bring up the charts? The first thing I do is I've got the weekly, the daily and the 4 hour. I'm going to go through and look at the market structure of each of these and see which direction we're heading. So initially, I'll break it down from the weekly to the daily to the 4 hour, and then I'll scale down on the smaller time frames. So as you can see here, this is the day that I took the trade. It was actually 2 days ago now. So initially, we've got the weekly chart here. As you can see, the market structure's come down. It's created a lower low, a lower high. So I've marked that out. And then what do? We've got another lower low. From this, now I can see that the market is bearish on the weekly. If we scale down on the daily, the thing is with the daily time frame, a lot of people will see this and they'll be like, oh, we're in a consolidation. You're not in a consolidation, because this consolidation here, for you to go from this point to this point, in fact, if we just measure this now, that's going to take you 69 days to hit that point. 69 days. You don't want to be in a trade for 69 days, no matter if it's a day trading strategy, swing trading strategy. The max I personally look to be in is 3 days. So coming down to this, I'm looking at the recent structure. As you can see, the market's come down again within the weekly zone, which is bearish. Come back up and it's now retracing down. So, oh, there we go. On the daily here, what have we done? There is this structure point here that's created. The market's broke underneath this. So it's coming down. That's the higher low. And then you've got the lower low here. And now it's just creating a new higher low. So what I'm basically expecting is the market to come down. So to mark this out, I'll get this here. Higher low, and you've got the lower low there. So now we've got the daily. We've got the daily here. What am I looking at this point? So in this point within the daily time frame, I believe that within this zone somewhere, the market is going to come back down and hit the target, which will be TP. So to do that, I'm looking for an area of interest. My area of interest is marked out from the bodies of the candles, just like that. And I usually look for a minimum of 3 taps. This is based, I only do the area of interest on the daily time frame, as you can see there. What you'll tend to find is the market will repeat itself over and over again. Like if you looked back 2 years ago, this point here will be respected. Coming into this. So now we're currently at the, let's make this slightly smaller on the previous bodies. So in my opinion now, the bodies of the candles in the daily is currently at the area of interest. So ideally on the smaller time frames, I want to be looking for a sell. So obviously you've got the confluence of the daily being bearish, the weekly being bearish, and then obviously now I'll check the 4 hour. In the 4 hour here, what has it done? So we're currently in the daily area of interest. If I just mark out this here, the market has created a gap here, which basically what it is the sellers have come in and now there's liquidity there. So the markets, like the big institutions, the banks, are going to want to come up and fill this gap in. And what has it done? I'll typically mark out this here. So around the recent bullish candle. And then on the 4 hour, it's tapped in that and it's retraced down. Just delete that there. So now what have we got? We've got the 4 hour time frame. It's broken underneath this structure point here. So it's created a higher high, which is here, and then it's gone down to break the structure point at this point, which technically now this is a higher low, and this point here is your lower low. So now within this time frame on the 4 hour, I'm looking for somewhere which I'm going to sell on the smaller time frames. So for me personally, clicking on this, I believe it was this zone here. So yet again, liquidity on the 1 hour time frame. This gap needs to be filled. So I'd mark out this zone here for the market to tap into. And then if we just go on replay mode, it's come down, tapped in. Right, so going to the 15-minute time frame, I'm looking for the structure change on the 15-minute within this zone now. So that's basically where it's going to be showing me it's bearish. So the pattern would look like this. And then you'd want to be selling around this area here, like that. So we'll replay this out here. Right, now what I'll do, a lot of my trades will be either in the 5 minute to get the entry point, scale down as target possible as you can, or the 15. On this case, I did use a 15. So as soon as the market's going to break underneath this candle here, breaking the structure, that's when I want to be getting in. Now when it comes to stop loss of this and the take profit, what I'm looking at ideally is I'll go onto the 4 hour, see what the market's saying with the structure. What can I see here? Straight away, the first thing that I'm seeing is a left shoulder, head, right shoulder, and then yet again this neckline here is getting retested. Just delete that. Now you've got the entry point. Where do you want to be putting your stop loss? If we go to on the smaller time frames, so you've got the 1 hour here. Stop loss entry point, I typically put it above the highest shoulder. So in this case, the highest shoulder is the right shoulder. Stop loss above there, which is a 30 pip stop loss. To be honest, the prop firm I was using, I would have put it slightly tighter, but they've absolutely fisted me with the spreads. 15 pip spread, so anyone who knows about spreads means a 30 pip stop loss with a 15 pip spread. It's a difference between where you anticipate to get in the market and where the broker actually puts you in. So straight away you'd be in drawdown, like I was. Now a target for your take profit. Now you've got the stop loss set. Take profit, in this case, I believe I was taking out on the 4 hour. The main target I was looking for was around this liquidity spot here. You're going to be taking out all the people who have bought down here with the sells. But the spot I was aiming for was, it was the liquidity just underneath this. It was at a 1 or 2. Like that. Normally I would have aimed down here, but with the brokers changing over, fucked it. Now, if we let this play out on the 1 hour, what do we see? It's done. That structure change, boom, there you go. 2% just like that. That's how I made exactly $3,698. I'm currently doing the same thing, exact same thing, same strategy on AUD CAD. As you can see here, it's not so much the head and shoulders formation, but we're still at the area of interest. The weekly's bearish, the daily's bearish, and it confluences with the AUD. Just show you my charts now. currently up, floating about 1,200 in profit. It is Friday, so I don't really like holding the weekends, but I probably will in this case. Anyway, there you go. If you want to see more videos like this, drop a like, subscribe, and I'll probably be doing these weekly.